Hey everybody, it's Pete. Good morning. It is Monday, March 30th, 2020. And first, I want to start out with the most important thing that we could discuss today in Stocks for Breakfast. And that is, I hope that you are safe. I hope that your family is safe. And I hope that you're taking the necessary precautions to do what everybody should be doing right now, which is lowering the spread of what's going on right now in the world. I actually went shopping last Friday. Totally, I'm not going to beat this into the ground, but I actually wore a mask and gloves. So please take this real. Please, I hope that you are safe. That's really the biggest thing. That's the most important thing, right? Life is really the most important thing, so we can get back to enjoying everything. We got two requests to review stocks from the recent video that we did on the best stock picks. One from Lils and one from Sehong. So thank you so much for requesting us to review some videos. Oh, and by the way, if you happen to like the video today, absolutely, please subscribe. That would mean the world to me. So first, we're actually going to go. We're going to go into the charts in 1 second, and let's actually do that first so that we can take a look at the stocks that they had requested. But first, we're going to take a look at the overall market because that kind of sets the tone for what we're going to be looking at during the day. This line here in the futures actually is where we closed on Friday afternoon. We opened a little bit lower. Obviously, the news over the weekend where the amount of cases of what's going on is dramatically going higher. But from a longer term perspective, we're going to see what that means actually on the charts. Because remember, we don't want to be chart readers. We want to be tape readers. We want to go from chart reader to trader. There's a big difference between the two. A chart reader just looks and sees what's going on. A trader actually understands that difference between accepting risk in exchange for the profit potential and learning how to manage and set that up. We want to make money. That's the whole point of us doing this, right? So it's not just about being the greatest chart reader on the world. It's not about knowing every pattern in the world. It's about actually pulling money out of the markets and making the market pay you. So it's kind of interesting here is despite the global bad news that we got over the weekend, we're not trading lower. And we kind of called that out the other day when we discussed the overall setup in the market. And I'm actually going to take a look at that right now very quickly. So we're going to take a look on the daily charts. And what we actually had noticed was that we traded into an inside day on Friday. The SPY actually kind of closed right at neutral. Generally speaking, I call this an indecision candle. And the reason it's an indecision candle is because it opened and closed in the same spot. So the buyers and sellers couldn't make, not so much they couldn't make a decision as much as they were all in agreement. So there was indecision in the time frame that you happen to be looking at, which in this case was a daily chart. But more importantly, it's inside the previous day. The Dow and the NASDAQ actually did end up closing negative, but also inside candlesticks and also small body candlesticks. And when I talk about the NASDAQ, I just want to be clear, I'm talking about the Qs. So what does that tell us? That tells us that despite the bad news, we had well bid. And if you're watching the videos for a while now, you know well bid means that higher highs and higher lows. So institutions are supporting higher lows and creating higher highs. So the smart money, the people with the real money, we're looking to piggyback on them. We're looking to ride their coattails until something changes. So within this very short-term window that we're looking at, that's where we're going to be. I also want to jump out because we got a few questions about how to analyze this stuff on using multiple time frames. So what's going to happen now in the next couple of days, this is where, and we're just going to use the Qs here as an example. That's where February opened. So this is the monthly chart of the Qs. So if we take it down to the daily charts, the week. First, we'll go to the weekly. We'll work our way down from top-down analysis. So this is where it opened. And remember, the Monday is not always going to be where the month opens. So for example, we are looking at when is the first? The first is on Wednesday. So that's not going to be the same as where Monday of this week opened. So just remember that there's different days that will happen. But what we're essentially looking at here from the purest technical perspective is were the intraday, in this case, intra-week price action above or below where the month started. So again, and I'm just going to come back to the screen really quick here. It's our job as traders to identify whether or not the long-term big picture order flow, which is where the smart money is moving stocks, in normal market conditions from quarter to quarter. So they report earnings, and that next 3 months are generally where the prices will trade, right? Until something new happens, maybe news or whatever it happens to be. Unless something new happens, you can generally get a feel for the flow of that stock, and you can do that whether it's you draw that line excuse me, from when the earnings are reported the next day and where it starts trading, and or as we're looking at right now, just from where the month is. And I'm using the month right now because for about 2 weeks, I was mostly covering day trading, the active window, because the longer term picture is still a mess, quite honestly. And the chart points really didn't matter. So we were looking at what I felt was the easiest price action to identify with a little bit lower risk profile. Not riskless, risk profile, because just in that day trading window, you weren't exposing yourself to overnight news and a potential gap against you. Seems like we're kind of settling in right now where, ironically, it's a very clean downtrend since the outbreak, and we are kind of floating to the downside now, where we're not pushing down as hard as we were. A lot of people were expecting today to open dramatically lower, and again, as we pointed out, we had that inside candlestick, which means we're in consolidation, and today we're in breakout mode. So if you missed the previous lesson where I've talked about this in the past, the market only really has two types of price action that is really necessary. If you add long order flow in the longer term, and you have a bias, a direction, that could be the third, but it's really consolidation or expansion. And expansion is obviously a part of what I call an order flow. And just a quick sidebar, if you want to know why I call it order flow and not trends, my history is I own 2 trading firms in New York City, and we had specialists and NASDAQ market makers come and trade on our floor. And their job was to trade the order flow from these huge institutions and banks and hedge funds. And they would get 1 million shares and they'd have to work that order flow. They get another 1 million shares and they have to work that order flow. So what I'm trying to teach everybody to do is to become a tape reader and to look at that order flow. You're not just looking at it as, oh gosh, it's an uptrend. Oh gosh, it's a downtrend. Look deeper into that, which is, you'll also see when I'm looking at charts. I'm not just using the high. I'm not just using the low. I'm saying, what is the real price that we're struggling at? What is the real price that we need to get through? And we talked about a couple of those stocks in yesterday's video when we looked at the best stock picks. One of the stocks actually had to get through a level. It was struggling. It was struggling. It was struggling. And we said we like it, but we like it above that level. That's what it kind of means. So getting back to the chart here, what we're looking to do is we're looking to, boom, have a spot that's the number. That's the number I'm going to read the tape from. Now, I've had some people email me, which, by the way, if you want to email me or leave a comment below the video, it's pete@stocktradingpro.com. I've had some people email me basically saying tape reading sounds a little challenging, but it's not. You're actually doing it already every single time you place a trade. You're essentially doing that because you're reading the tape on the price you got in. So if you bought a stock here and it's going up or it's going down, nobody on the planet knows that stock better than you, because I'm making money, I'm not making money. I'm making money, I'm not making money. Our job as traders is to find a spot to read the tape before we get into the trade, so that we have a really good spot to say, this stock is strong or it's not strong, and that's how I'm going to manage and decide if I want to be in the position. So what we'll do is top-down analysis, saying, okay, the monthly time frame is where the big money's pushed around. So if you remember what we said a few ways back, that it's our job to determine where 1,000 coats bought, and I'm using coats in a retail way, but talking about stocks, or we're only 100, one coat sold. So in other words, on the monthly chart, a lot more money is invested to create that time frame, right? From March 1st to March 31st, that's 31 days worth of buying versus just yesterday. 6.5 hours versus 31 days, you have a bigger sample size, right? Which means a little bit more. So if we go back to the charts right now, we're going to see what that means as far as setting up a trade, because we have the first coming up this week, and we're going to be able to identify it a little bit differently. So here's where March opened in the Qs, and obviously we were down and we were down. Now, and again, I'm going to use the word like here from a trading perspective, not that we like prices going down, but what we would have liked to have seen were larger red candlesticks, so that the weekly charts were in sync with the monthly charts. And I say in sync because we're trading below. So below, the longer term order flow is bearish in this case, meaning the monthly chart. And then well offered, right? This week is well offered. We have lower lows, lower highs, lower lows, lower highs. And then we have a bullish engulfing week, which is kind of interesting. And now we go into an inside candlestick. So I just wanted to give you an opportunity to set up, and we're actually going to use a stock that a lot of people are talking about right now, Boeing, which obviously here is the same situation. So here is the opening candlestick for the beginning of the month right there. And that's kind of what you would like to see in a perfect world. And again, not a perfect world is not Boeing going down. A perfect world, and we're actually understanding that we're getting closes far away from the open. In this case, the open up here and the close down here, which is why the candlestick is red. And you can see during those weeks, you could have held those stocks as a swing trade on the weekly candlestick because the higher time frame is actually in sync with the shorter time frame. So remember, the higher time frame dominates, and then we go to the shorter time frames to confirm it's still in place and also to time our entries, manage our risk. Then we go back to the higher time frames to learn to hold those trades longer. Okay, so I want to get into the stocks that we were asked to review, and a pretty good one by both Lils and Sihong today. They asked us to look at NIO, and if you don't know, NIO is actually a electric car manufacturer in China. So obviously, NIO would have the same type of conversation, but not as big a company as Tesla. So we could take a look at the both of them. But really, what it comes down to right now is China is experiencing some very tough situation right now, and I'm going to paraphrase because I don't want to mix the two, but I'm going to be very clear. There's short-term trading, what's going on in the global economies right now, and the need to purchase new electric cars versus the long-term prospects of a company that is an electronic car manufacturer and one of what many might consider in their area a leader in that, right? So whether it's Tesla or whether it's NIO, okay, it's the same story, for lack of a better way of putting it. Long term, look at what Tesla is doing before this just happened, and NIO, probably the same exact chart, right? But obviously on a much, much smaller scale, right? The one thing, however, and this is important that I want to talk to you about to make sure that you pay attention to is the volume that's going on in the stock. We haven't really seen any heavy negative selling volume where they're just dumping stocks where you might call it distribution or markdown, which if you know the 4 stages of price action, in this case, we didn't see that. We do see a lot of indecision. So I want to make that clear as well. We often talk about reading the notes versus reading the song. If you read the notes and you see all these indecision candles, which are small body candlesticks, that would make this stock nothing more than a longer term play because day to day, there's a lot of indecision. And that means that there's not a lot of large green or large red candles on a daily basis to day trade the stock. So this would only be a longer term play for me personally. I'd want to see consistency in the red and green and well bid, well offered to tell me that every day, if I'm going to allocate time and money and energy to the stock, that it would need to produce it on a regular basis. So these two stocks, again, similar in my opinion to short term, little tough. Does anybody really need to go out and look at electric cars right now? Probably not. NIO actually got loans, so in the short term, that's going to help them. But can they survive after that? That remains to be seen. But long-term electric cars, I think Tesla has shown everybody right now that there's a lot of interest based on what the stock was actually doing prior to what just happened. This might have been a little bit overblown to the upside, but that doesn't change the fact that there's a lot of excitement and they're a leader in that particular area. So long-term is basically what I'm looking at in those stocks. What's interesting about the airlines and what's also interesting about the cruise lines, a lot of people looking at those both as well. And you can see here that the volume has increased dramatically without further moves to the downside. Now, generally speaking, when you get increases in volume without an advance or a decrease in price, generally speaking, that's if it's on the up after a big move to the upside, that's distribution where you're getting money moving from smart hands to the public or inexperienced people. And when it happens after a big move to the downside, you get a high volume and not a lot of price action. That's generally accumulation. So again, very similar to what we just talked about as far as electric cars. I believe that these are much, much longer term plays. I know personally, I'm not about to get on an airplane or a cruise line anytime soon. However, if you're looking at it as a longer term play, that could be something that you might want to consider. Now, the question is, can you handle from a risk profile if the stock, any one of these stocks continues to move lower to the downside? A lot of people, myself included, believe these are better long-term plays. Where do you think this is going to be 2 years from now? So that's obviously not a trade. So that requires smart money management if you are looking at this as a longer-term play to build a position. And again, something that I brought up a while back is you need to ask yourself, if you're ever in a position and you're not sure that you want it, you have to ask yourself, if I didn't have it, would I want it? and the answer that comes back immediately is the truth. So one other part of that is if that's the answer and the answer is no, you could pull the plug. And again, this is your trade, not my trade. The way I would handle it, if the answer comes back no, I would either get out or scale out. And I'm very big on scaling out because if I still like the idea, which that's really hard to determine right now, it's not a trading idea to be a buyer of the stock right now for me. Is it a investment, a longer term play for 2 or 3 years? If it was, I'd reduce my risk. I'd be looking to rebuild the position at better prices, take a loss if I happen to be long higher. And remember, we're not trading to be right. We're trading to increase and see our account grow as quickly as possible, but also as smartly as possible. So if it was me, I would be looking to accumulate a position for a much, much longer term play. And if you happen to be long from higher prices, remember long means that you bought the stock or you own it. I could be looking to scale out and then looking to reestablish a position for a longer term play. The other stock that we were asked to review was CLVS, Clovis Oncology, a cancer drug, for lack of a better way of putting it, ovarian cancer specifically. And the one thing that's interesting about this is that it performs very well with volume spikes. It's actually down 41% from the last earnings report. However, look what it was doing prior to what's going on in the world right now. We were actually up here and testing new price levels. So this is kind of interesting, and I do like what I would call a fuel candlestick here in the stock. And if you're new to my terminology, fuel means a large-bodied, large-volume candlestick breaking out of a consolidation, more powerful for a longer-term consolidation, but you can get an idea of what's going on here. So we'd be looking for follow-through. I personally would not be doing anything in this stock until we got back above here, because that's kind of like the pre-New World levels that we'd be looking at, right? So that's a general breakdown of a couple of stocks that we're looking at, but I want to get back to the SPY and how you're going to look at today. And I think this is very important. I'm going to take the volume off the screen. Essentially what we're looking at today when we're discussing consolidation into a breakout, that means that we are essentially setting ourselves up to be in a trend day mode. So when you get that consolidation and you come out of the consolidation, you tend to get days that open near the low or close near the high, or open near the high and close near the low. So essentially what we're looking for is a large green candlestick today. Now the fact that we're not really trading that much lower is encouraging. We're going to actually get sort of a flat opening. But then what we're going to do is we're going to combine where we are from today's open to yesterday's close, and then yesterday's high and low, meaning Friday. And those are the ranges or the levels that we're going to trade around for today. So essentially what the game plan for me today is, because we're inside, I'm looking for stocks that I could get involved with, stay above or below the opening price, depending on how it unfolds. And remember, inside day breakout does not call direction. It only calls magnitude. So in other words, when I say magnitude, we're consolidated and we're looking to break out. It could be breakout or breakdown. And if and when that happens, so let's just say for argument's sake, we open here and start trading above the opening price, I'd be looking for stocks that are doing the same thing. So the larger picture is on the same page as the shorter term picture, and the market in your stock is doing the same thing. So if the stock and your industry and your sector is positive, you would actually end up looking for stocks doing the same thing. One last thing I want to go to is one of the big stocks that I actually just mentioned before, which was a stock that, from what I've heard, quite a few people got a decent trade off of this. I personally did not, so I don't want to make it sound like it did. But the industrial sector, if we go into the screeners here in FinViz, we're actually going to take a look at the groups. And you can see over the last week, industrial goods actually had a really good week, and it was a solid bounce off of that level. So we actually went in and dug out stocks that were industrial stocks. And you can see Boeing and some of the home builders that actually had a really, really powerful week. So what you do is you go into the scan. I'll drop the scan below in the comments. You can take a look at it and see if any of those stocks actually meet the criteria for you to get involved. It might be short covering. Remember, short covering is a fast bounce off the lows with a lot of volume, and that's people getting out of shorts, not necessarily people initiating new longs. It's a different trade. Remember, we mentioned that short covering means you're buying after you sold the stock short to get out of it. New buying means you're expecting it to move higher at that point. Well, actually, both of them probably expect it to move higher, but one's taking a profit and one's getting into a new trade. I also want to mention something. This book is actually one that has helped me tremendously It's called Mindset by Carol Dweck, D-W-E-C-K. And I think it's a really good trading book. It has nothing at all what to do with trading, but it actually talks about the mindset that you need to learn from everything that happens. You have a growth mindset where everything becomes a lesson and you continue to improve, or you have a fixed mindset where you're like, no, I'm right, the market's wrong, I'm right, the market's wrong, but you keep losing money. It's good to have a growth mindset because every single thing that you do in the market helps you learn to become a better trader. And hopefully I'm hopefully doing that as well during these videos, where I'm starting to hopefully give you the mindset of what the difference is from just reading charts versus setting up trades, and then ultimately getting to the point where you're managing trades in a way that you act like a professional, where it's really about risk management and managing your own capital in a way that it's not about being right. It's about learning and letting the market tell us what is going to happen next, and then actually allocating shares and holding trades longer when the market calls for it, or taking quick profits or quick losses when the market calls for that too. So Mindset's actually a pretty good book too. The market is going to test your patience. The market's going to test the market's going to test your ability to bounce back from adversity. And hopefully, if I have a superpower, my superpower is I believe anything is possible. And I truly hope that I can impart that to you. I hope that we can become friends through these videos, where if you're having a bad day, I'll be the first to pick you up. And if you're having a great day and you're seeing some success and you want to post it in the comments, I'll be the first to say, awesome, how can we keep doing it better? So those are the game plans for today. We're looking for an expansion in volatility. If you do get that, and whether your stock is above or below the opening price, in sync with the market, the industry, the sector, stack the odds, get a good argument, that's what we're going to be looking for to play out in the market today. So no bias today so much as we're looking for that type of trend day. So hopefully the one day hold to the close. And remember, on Wednesday, we're going to reset the monthly chart, so that'll give us a better picture. Excuse me, burping for my coffee, to start setting up some new trades, which could be from the long side. Who knows? But we'll let the market, as tape readers, tell us what to do. So I'm Pete Renzulli signing off. Monday, March 30th, 2020. Thank you so much for attending Stocks for Breakfast with me today. And if you enjoyed the video, please click subscribe. That would mean the world to me. Have an awesome day. Be disciplined and be safe, everybody. Have an awesome day.